Thank you, Manisha. And good morning to everyone, and welcome to day 2 of the Singapore FinTech Festival. Last year, I spelled out 5 key outcomes that we want to achieve through FinTech collaboration. Instant remittance, atomic settlement, programmable money, tokenized assets, and trusted ESG data. These continue to be anchors for our vision of Singapore as a smart financial center. But let me package them today in a more intuitive, outcome-based way as I report progress and set out where we want to go next. Our goal is nothing short of audacious: to collaborate with the financial industry and international partners to shape the financial ecosystem of the future. There are 3 key outcomes that we want as part of this future. 1, instant payments. Make cross-border payments cheaper, faster, and more efficient. 2, seamless end-to-end financial transactions. Enable financial assets to be transacted seamlessly across multiple trading venues through digital assets, digital money, and interoperable digital networks. 3, trusted sustainability ecosystem. Foster a trusted data and disclosure ecosystem to support sustainable finance for the world's transition to net zero. So let me start with FinTech's foundational pillar, electronic payments. Singapore's e-payments journey has taken us from domestic transfers to bilateral linkages, and now to multilateral networks. Singapore's retail payments infrastructure, Fast and Pay Now, has made digital transfers across bank accounts and e-wallets widely accessible. We can now transfer money electronically to individuals using just their mobile numbers or national ID numbers, and to businesses using their unique entity numbers. In real time, 24/7 at zero cost. Now, this payment infrastructure has supported a boom in e-commerce and a variety of online services, especially after the COVID-19 pandemic. Singapore has combined multiple QR codes into a single SGQR label, the first of its kind in the world. This single label, compatible with multiple consumer apps and e-wallets, has made QR code-based mobile payments simple for consumers, merchants, and billing organizations. SGQR is now accepted by over 90% of merchants in Singapore. And we've just now embarked on SGQR Plus to explore enabling merchants to accept QR code payments from a variety of payment schemes through a single financial institution. Now, this is the final step towards complete QR interoperability. It means a merchant can consolidate transfers coming in through from multiple payment schemes or bank apps through a single set of accounts. Singapore has also led the way in bilateral instant payment linkages. Singapore's PayNow has linked with Thailand's PromptPay and India's Unified Payments Interface, enabling individuals in Singapore to directly transfer funds to and receive funds from individuals in these 2 countries, real time. I'm pleased to say that by the end of this week, we will now have real-time payments with individuals in Malaysia through the PayNow, Do It Now linkage. Singapore has also been establishing QR payment linkages with its Asian neighbors. And thanks to our QR payment linkages with China, Malaysia, and Thailand, travelers between these countries can experience seamless transactions, from purchasing train tickets to indulging in local shopping. And now I'm happy to say that later this week, we will be able to do the same, experience the same convenience with Indonesia, with the launch of the connectivity between NetsQR and Indonesia's QRIS. Third, Singapore is now working with like-minded partners to create multilateral real-time payment system, from domestic to bilateral to multilateral. Last year, I said that MAS had been working with the Bank for International Settlements, the BIS Innovation Hub, which has a Singapore center, on Project Nexus, a multilateral solution to link multiple national real-time payment systems. Now, since then, there have been 3 developments. First, the BIS Innovation Hub has published a technical proof of concept for connecting the payment systems of the Euro system, Malaysia, and Singapore. Second, MAS has partnered the central banks of Indonesia, Malaysia, Thailand, and the Philippines, and the BIS Innovation Hub to develop the core foundational work for a multilateral payments system linkage across the 5 ASEAN countries. Third, central banks from outside ASEAN, from major economies outside of ASEAN, and real-time payment system operators have expressed interest to be part of Project Nexus. Our vision is to form a coalition of the willing to build a global public good payment utility. Users around the world should be able to send money across borders in a secure, efficient, and affordable way. But we must aim higher. A larger vision that is now emerging among many of us is that of a network of interoperable systems that allows payments, clearing, and settlement to take place instantaneously and seamlessly. The key components to realize this vision are digital assets, digital money, and digital infrastructure. Digital assets, or tokenized assets, have 2 critical features that can fundamentally transform the nature of financial transactions. And these 2 features are direct exchange and fractionalization. So first, direct exchange. Tokenization enables financial assets to be represented as digital tokens that can be exchanged directly without the need for intermediaries. Now, this makes possible atomic settlement, or the simultaneous exchange of 2 assets in real time. It eliminates settlement risk, duplicative reconciliation, and the need for large funding accounts. The second thing that tokenization does, it enables the fractionalization of assets. This makes possible the partial collateralization of assets and grants a much broader range of investors access to these assets when they are fractionalized. So that's digital assets. Now, digital money provides a secure and stable medium of exchange to operate in this ecosystem. It enables the payment, clearing, and settlement of these digital or tokenized assets simultaneously on the same platform. This eliminates frictions that arise from delays in clearing and settlement, especially in cross-border settings. Next, digital infrastructure. Digital infrastructures help to host and exchange digital assets and digital money. They form the basis of digital asset networks that have spawned the world now. These digital infrastructures enable the ownership and transfers of tokenized assets and digital money to be recorded consistently among participating entities and directly onto the ledger. Digital asset networks run on these infrastructures and facilitate trading, payments, clearing, and settlement of digital assets without the need for intermediaries. So to fully realize seamless financial transactions across digital asset networks, we must ensure that they are interoperable and connected. Currently, there's a proliferation of digital asset networks due to different commercial motivations or legal and regulatory requirements. Now, we cannot wish these dynamics away. and force consolidation of all financial transactions onto a single network. That's not feasible. What is more feasible is to work towards making these diverse networks interoperable. So how should we build this new financial architecture? Let me start with digital assets. So through Project Guardian, MAS and industry players are tokenizing different asset classes with specific desired outcomes for each of them. So we're tokenizing foreign exchange to achieve 24/7 global liquidity pool. This will free up trapped liquidity that is fragmented across multiple trading venues in the world. It will also reduce the cost of establishing and maintaining multiple bilateral counterparty trading lines as required in today's over-the-counter market. Example, the Bank of New York Mellon and OCBC Bank here are trialing a cross-border FX solution to enable secure, interoperable payment solutions across heterogeneous networks. Next, we are tokenizing bonds for seamless cross-border distribution and settlement. Now, this unlocks liquidity for traditionally less frequently traded assets and facilitates their use as collateral for financing. It also enables greater operational efficiency for cross-border distribution and settlement of capital market instruments. UBS, SBI Digital Asset Holdings, and DBS Bank executed a pilot repo agreement with natively issued digital bonds working across Switzerland, Japan, and Singapore. Third, we are tokenizing funds for efficient issuance and trading. Now, the native issuance of variable capital company, or VCC funds, enhances distribution and secondary market trading of fund shares. So Franklin Templeton is piloting this, the issuance of tokenized money market funds through a VCC structure to maintain the records of share ownership, offering greater transparency, lower minimum subscription cost, and increased efficiency. I'm pleased, and Kristalina announced this yesterday, that the International Monetary Fund is joining Project Guardian, which has set up a policymaker group. MAS established this policymaker group earlier this year to partner fellow regulators in Japan, Switzerland, and the United Kingdom to explore the frameworks to underpin asset tokenization. The IMF will help provide the global perspective that we need to scale these efforts. So that's digital assets. Let me move on to digital money. There are 4 contenders for digital money in the future. 1, privately issued cryptocurrencies. 2, central bank digital currencies, or CBDCs for short. 3, tokenized bank liabilities. And 4, well-regulated stablecoins. Cryptocurrencies, private cryptocurrencies, have failed the test of digital money. They have performed poorly as a medium of exchange or store of value. Their prices are subject to sharp speculative swings. Many investors in these cryptocurrencies have suffered significant losses. The next contender, wholesale CBDCs, and second and third contenders, wholesale CBDCs and tokenized bank liabilities. Now, these can play the role of digital money and help to achieve atomic settlement because they correspond to the existing monetary system, which comprises central bank notes and coins and bank deposits. So you have CBDCs and tokenized bank liabilities. Since 2016, MAS has conducted many experiments with other central banks and the financial industry to explore the use of wholesale CBDCs on distributed ledgers to facilitate real-time cross-border payments and settlements. We will take our experiments a step further next year. I'm pleased to announce that MAS will pilot the live issuance of wholesale CBDCs to instantaneously settle payments across commercial banks here. Now, previously, MAS had only simulated the issuance of wholesale CBDCs within test environments. we will now go further into live. We will partner the local banks to pilot the use of wholesale CBDCs as a common settlements asset in domestic payments. So banks will issue tokenized bank liabilities that represent claims on their balance sheets by their retail customers, right? Now, the retail customers will be able to use these tokenized bank liabilities in transactions with merchants who can in turn credit these tokenized bank liabilities with their respective banks. Now, the outstanding interbank obligations arising from these transactions will be settled via an automatic transfer of wholesale CBDCs that the banks are holding. So clearing and settlement occurs in a single step on the same infrastructure, unlike the current system in which clearing and settlement take place on different systems and settlement occurs with a lag. The last contender for digital money, stablecoins. Stablecoins, if well regulated, can potentially play a useful role as digital money alongside CBDCs and tokenized bank liabilities. And this diversity is important. So MAS has invested in developing a rigorous stablecoin regulatory framework to ensure a sound stablecoin ecosystem in Singapore. But the legislative amendments for the stablecoin regulatory framework to take effect will not be ready for at least a year. So an interim approach that we've taken is to acknowledge entities whose stablecoins can already demonstrate compliance with MAS's regulatory framework. So I'm pleased to say MAS has granted in-principle approval under the Payment Services Act to 3 entities who will issue stablecoins that substantively comply with MAS's upcoming stablecoin regulatory framework. The 3 entities are Straight X SGD issuance that will house the XXGD pegged stablecoin that is already on the market. 2, Straight X US dollar issuance stablecoins. And 3, Paxos Digital Singapore that will issue new US dollar pegged stablecoins. Now, once the legislative amendments take effect, these stablecoins will be regarded as MAS-regulated stablecoins and carry the credibility that goes with it. Well-regulated stablecoins help to spur innovative use cases. One example is in purpose-bound money, showcased through Project Orchid. So StraightX is trialing the Singapore dollar stablecoin in purpose-bound money to facilitate escrow arrangements in e-commerce transactions. Now, this ensures that funds are released to merchants only when the customer receives the purchased items, providing greater assurance to both parties, customer and the merchant. Now, this is being tested at this Singapore FinTech Festival in partnership with Amazon and Grab. The final piece of the new financial landscape is its underlying digital infrastructure. The limitations of existing digital asset networks mean that they may not be fit for purpose as a global infrastructure for digital assets. So today we have public permissionless blockchains. Now, they have attracted many users and applications, but they suffer from a lack of accountability, anonymity of service providers, and some legal uncertainty. Then you have private permissioned blockchains. Many financial institutions engage in these. Now, they address the regulatory and legal concerns well, but they suffer from a lack of interoperability because they're private. And this leads potentially to fragmentation of liquidity in digital assets, which is what we're trying to solve in the first place. So what do we need? We need open and interoperable networks which are also compliant with relevant regulatory requirements. So I'm pleased to say that MAS and a group of industry players have come together to launch the Global Layer 1, GL1 initiative as a foundational digital infrastructure across multiple DLT networks. Now, GL1 is conceived as a global public good. It'll facilitate seamless cross-border transactions and enable tokenized assets to be traded across global liquidity pools while meeting regulatory requirements. So MAS welcomes interested financial institutions and international policymakers and others to join this initiative. A foundational digital infrastructure also offers the possibility of regulatory compliance by design. So instead of doing regulatory compliance checks after systems are implemented, a compliance by design approach enables policy and regulatory requirements to be programmed beforehand and enforced automatically in real time. So together, digital assets, digital money, and a foundational digital infrastructure can help realize the vision of seamless financial transactions across the world. So I encourage you to visit the MAS Future of Finance booth in this exhibition, where we have shared this vision in greater detail for a future financial ecosystem. Next, trusted sustainability ecosystem. So last year, I spoke about Project Greenprint, a collaborative effort with the financial industry to build a trusted data ecosystem to support sustainable finance. Data collection processes, as you know, are manual and tedious, verification is costly, and the ESG reporting landscape is fragmented. Project Guardian sought to bridge these gaps by piloting digital utilities to streamline the connection, access, and use of ESG data. I'm pleased to announce that the next phase of Project Greenprint, the launch of a new Greenprint integrated platform titled GPRNT AI. It will be driven by a new entity, Greenprint Technologies. I'll stick to Greenprint Technologies. This entity will be supported by MAS together with HSBC, KPMG, MUFG, and Microsoft. The new platform aims to unify and synergize the current pilots that are occurring under Project Greenprint, to deliver enhanced capabilities that support Singapore's national-level sustainability reporting and data needs. Greenprint has developed a simplified ESG reporting tool focusing on the needs of small and medium enterprises as a first step, enabling them to leapfrog complexity and costs. Reporting entities can consent to releasing relevant data from digital systems that they employ in their day-to-day activities. These include utility meters, business accounting and payroll solutions, and building and waste management systems. For Singapore users, trusted data maintained by government agencies are also available, retrievable through the MyInfo Business platform. Greenprint will organize all this data into ESG-related outputs, which are returned to the reporting entities. Where source data are unavailable, we will try to use AI tools to allow users to upload documents and extract key data. For example, a Microsoft GPT-4-powered chatbot will help bridge data gaps and also craft appropriate sustainability narratives based on the data. Our vision is for Greenprint to become a baseline for how companies report ESG data. Beyond Singapore, Greenprint will also look to partner and collect data from countries and sectors where our financial institutions have pressing needs to better support their climate risk management and net zero transition efforts. We look forward to onboarding more partners shortly and growing the platform regionally and ultimately globally. Greenprint goes live next February 2024, and will progressively scale over the course of the year. Now, we need to come together to co-create these systems for good ESG data that will underpin our collective efforts to meet the world's 2050 net zero targets. So please visit the Greenprint booth in Hall 5 to learn more about the platform and discuss your partnership prospects. Let me conclude, as I've done on so many previous FinTech festivals. Everything we do in FinTech must have a larger purpose. Yes, there is money to be made, costs to be cut, and opportunities to be seized. But FinTech is more importantly about solving real-world problems, about improving people's lives, about promoting a more inclusive society, and about securing a sustainable planet for our future. This sense of higher purpose has permeated the FinTech Festival since 2016. It is why people come back year after year to the FinTech Festival to build a better world. Thank you very much for all your support. Have a great FinTech Festival. Bye-bye.